Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Wednesday, the 8th of March, 2017, just after 1:25 p.m. Central Standard Time. A down day in all of the grain markets, and I feel a bit vindicated. I was surprised yesterday that wheat, once it hit a certain number and it bounced back up, going, oh man, I was so aggravated at that, but holding. Keep your eye on the crude here. Interesting, down $3. That's not wrong. And I have some work that's called the third flip of window envelopes that says that this is an area that it's going to try to grab traction at. Now, the key is if it gets under 50, does it catch a rash of stops or is that it? It's been working probably on stops here all the way down, but that 50-15 area, interesting to me in terms of where the third flip of a window envelope is. We're not getting that kind of follow through off of that in the stock indices. You've got the NASDAQ up, the others down. Remember, we have the European Central Bank first thing in the morning with their monetary policy and then Mr. Draghi's press conference. And if you take a look in the metal markets, just an ugly day as this market keeps letting loose to the downside, and they're really cratering the copper once they saw that two-day build at the LME warehouse, the largest build in 20 years. So stock builds big. So as we look at the bean chart, there's nothing to be excited about on the upside in this market. You're still going from 1080 to 1006. Now you're going to finish out today. I don't have the exact settlement prices yet. I'm a little early. But for the week, you're down about 17 points. I think you're going to close 21 and a quarter on the daily close, not 21. And in looking at it, you can see you're just in a clear down thrust. So now you're down 30 cents from that high. As we go on to a daily chart, the key number is going to be, can you get through this area? And if you do, will there be stops waiting for the market under that? As I keep looking at swing lines, this is that same chart without a swing line, by the way. This is it with it. Lower highs, lower lows. That's what? A downtrend. Where are you in relation to key moving averages? Well, today and yesterday, let's take the market here on Monday. Market goes down, settles under the 100-day average, which is 1033, and another day down on it today into the 1021 area. So we're into this prior support zone that comes all the way back here as well. It's not the easy break that it looks like on right there, but rallies now have two layers of resistance, 1034, the 100-day average, and 1041, the 18-day average of closes. In terms of market momentum, as you can see, if you're going to keep going down, the potential is that the lower Bollinger Band in the neighborhood of 1009 could offer the market some support, and you are getting oversold. This is a market that was oversold, got out of it, and right back into it, not acting very good. In the meal market, you did hold the area that I was looking for, which is the lower Bollinger Band. Didn't quite get to that 100-day average of closes, but there is a but going on right now. I want you to take a look at this setup. If you look at it and how many days you now have under the lower Bollinger Band, not Bollinger Band, the slow stochastic. Do you see how both numbers here are under 20? Day before they're under 20 and the day before. That's what I call an embedded reading. When it's lost, prices often go back to the 18-day average of closes. However, that also means until the red line gets back over 20, rallies in this market will be probably aggressively sold short. In the soybean oil, the bears have grabbed control again, lower highs, lower lows, and settlements under the 18-day average. Should it decide to let go, one of the potential supports might be that 32.29 Bollinger Band, and momentum, it has turned now the corner to the downside. In the corn market, you've got a higher high and a lower low. So the first thing I tell you is there's no trend. There's downside bias because you're under the 18-day moving average of closes, and two layers of support coming together. The Bollinger Band bottom at 368 and a quarter and the 100-day average of closes at a 100-day average of close, 367.5. Momentum still pointing to the downside. Now in the wheat, Chicago wheat let go today, got under this 448 level. So now you got a higher high and lower low, nothing that you can talk about in a trend. Sugar market, still letting go and riding that lower Bollinger Band down. That's very bearish action. Are we embedding? Well, just like we looked before. Day one today, both numbers under 20. Day two was yesterday. And the third day was the day before. The answer is an unequivocal yes. You are now on good rallies until the red line's lost. Bears will be very aggressive. Coffee market went down, skinning. How does that for a word? Skinning the lower Bollinger Band in an oversold condition. I think people are taking some money off the table in this general area because you are so oversold. Cocoa's not far from that either. Cocoa's oversold. Can it build on this? I don't know. When you get this oversold, you either go right down to that Bollinger Band or you might want to consider scooting, as I call it in those markets. Now we get to the cotton market, which is still acting bullish but overbought. You have the red line with a reading of over 70. So that's an overbought situation in a trending market, higher highs, higher lows, higher highs over the 18-day average of closes. Cattle market's an interesting setup here. If you take out 114.90, you could end up with a pattern of lower highs, lower lows, and finally a break down into the support level. Can anything be bullish on the chart just here? No. And the reason is you've got a lower low and a higher high, so there's nothing there that I see friendly. Feeder cattle market, I've pointed this out and I'm going to repeat it again. It is caught between the 100-day average, 121.97.5, and let's call it 123.50, the 18-day average of closes. Just back and forth right there. Yes, the trend is down. Pros are probably selling it into that 123.50, but they'll bail like that, I think, if you get over 123.90. Why? You would then have higher lows, higher highs, and you could go right back to 125.87. Tomorrow's going to be a real important day in that chart. In the hogs, all we've done is rallied back to the resistance point of the 18-day average of closes. Now, what I think will happen here is if the market can get out of being oversold, you got a 28 reading, so anything under 30 is oversold, the marketplace would look, and under today's low, you might attract some selling. Not on a rally, because you got a higher high and a lower low. But if you take out today's low of 67.90 and don't take out 68, 67.5, you could end up with lower highs, lower lows, and that reaffirms the bear trend. I want to remind you that Modern Trader magazine, the April issue, is out. We'd love to put it in your hands if you don't have it. It's a $79.95 value. You get their magazine each month by email. This is what it looks like this month, and yes, it's KOL, SellRL, I mean everything, Forex, the dollar they're discussing, cycles, the BRICS, the China, what's going on. You're going to get option ideas, articles, platinum gold spread with the charts that look just like you see here, and then of course symmetric triangle patterns. How do you work with them? How do you trade them? This is a great thing for your library. Then daily you get market focus. So it's all free. All you need to do is either give us a call, go to our website. You'll see a carousel of free offers right on the front page. Choose one and away you go. You can click up here if you're watching me on YouTube. And underneath us on many, many websites, you will see, click here, fill out the form, and away you go. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.